Cost behavior. Cost behavior is the change in the behavior of a cost, or costs, due to a change in business activity. The study of this change is the cost behavior analysis. For example, the electricity cost will move up if a business extends the working hours. However, not all costs change with business activity. For instance, a company needs to pay insurance whether or not it is operating. A manager needs to understand the behavior of the costs to help plan the activities he or she is managing. Knowing this allows the manager to determine beforehand if any cost will decline or rise with the change in the business activity. It helps the management in planning and controlling costs. To begin with, there are variable costs. Variable costs vary directly, or in direct proportion, with the change in the business activity. The business activity usually is sales. In direct proportion means if sales changes by 10%, then the variable cost will also change by 10%. For example, displays are a variable cost for a mobile manufacturer. The more the number of mobiles a manufacturer produces, the more will be the cost spent on displays. An interesting observation is that the variable cost per unit remains constant despite a change in the level of business activity. Next, there are fixed costs. These costs do not change with any change in business activity. For example, a business will still need to pay rent even if it is generating zero sales. Depreciation is another example of a fixed cost. A point to note is that a fixed cost per unit may increase or decrease with the change in the level of business activity. Then finally, there are mixed or semi-variable costs. Such costs are a mixture of fixed and variable costs, and thus, contain the elements of both. For example, an internet bill includes a fixed monthly charge plus a variable fee based on usage. Generally, these costs are not very useful to the company in its original form. So, accountants usually split them based on their fixed and variable components. To do so, they use cost behavior analysis techniques, such as the high-low method. Understanding how cost behaves with future changes of business activity is essential in profit planning, which is a major part of a manager's duties.